All right, we will go ahead and get started, guys. Today we're going to be talking about halts, something we see every single day in trading, something we often even trade. As always, the lesson will be recorded. I can't share my screen in here, but I do have some stuff up on the screen. I'll have some graphics. I'll have some examples as well. So if you guys want to go back and look at it, this will be recorded. Feel free to ask me any questions. I'm going to just go through the lesson and we'll hit questions at the end. This one will be a little more abbreviated than some of the other ones. Again, this is just a beginner lesson on halts. So what is a halt in trading? So if a stock gets halted, it is because that stock either rises or falls a certain amount of time in a small period, and that triggers a halt. And that happens to discourage panic selling or FOMO buying and to kind of correct the imbalance in the order book. So no buy or sell orders can go through at that time. A stock that is 75 cents to $3 is going to be halted if the price moves 20% in a 5-minute period. And then a stock that is $3 and above is going to halt if the price moves 10% or more in a 5-minute period. So any stock under $3 has a little bit different parameters. It just has to move a little bit more, which a lot of times isn't really an issue because, the lower the stock, usually the more the volume, the more order size you're going to see. So under $3, 20% in 5 minutes. $3 and up, 10% in 5 minutes. So let's say you are in the stock. Let's say, the stock hits your scanner. You see it, you think it looks pretty good, you develop a plan, and you get in the stock, and then the stock gets halted. So let's say it's a 5-minute halt. The stock opens up, so you're already in the stock, it's halted, it's now open. So if it opens red, meaning that it opened lower than where it halted, let's say it halted at $5 and opens at 470, it's usually a good idea to flatten that position. With halts, as soon as you see red, it's usually not good. Obviously, there will be times where it will, continue higher, but more often than not, if you play 10 halts and 5 of them open up lower, probably 4 out of those 5 are going to continue lower. So if you're in the halt and it opens lower, then it's probably a good idea to just flatten that. Now, if it opens green, which means it opens higher than where it halted, then if you haven't yet, you should probably take a little partial, whether it's half or a third, and then, continue to trade your plan. Obviously, it can continue way higher, and you could add to your position at times, or, it can move up briefly, take a partial, it comes down, taps your average, break even, whatever. You stop out, still a green trade. So that's just a short summary if you're already in it. Now let's talk about if you aren't in the stock prior to the halt. So you're looking at a stock, you're not in it yet, it gets halted, and you decide that you want to trade it when it opens. So we do that a lot, and it's called the dip and rip. So you can trade the dip and rip if you want, and basically what you want to look for is you want to see the stock open higher than where it halted. You're going to see it quickly dip below that price that it opened at. So let's say it halts at 475 and opens at 5. If it opens at 5 and then kind of dips down to 475-ish, you can do basically 2 things. You can try to buy that dip off 475, or the thing that we do more and probably the more probable play would be to buy as soon as it breaks that level. And that's why it's the dip and rip. So it opens at $5, it dips down to 475. As soon as it rips up through $5, that's where you purchase. And then, you continue to trade your plan. So the dip and rip is it opens higher than where it halted. It dips a little bit below the level it opened, and then it rips through that level, and that's where you buy. And that's the dip and rip. So that's just kind of a brief summary of what a halt is and then kind of how to trade it. I do have a few graphics that we'll go over. So there's different types of halts, and the main halt that we see and or trade is the circuit breaker halt. Now, other halts can happen. You're not going to see a ton of it, and especially in momentum stocks, the stuff that we trade, it's not really going to be applicable, but there's basically 4 main types of halts. There's a T1, a T2, a T5, and an H10. So The T1 is basically significant news is pending and the stock gets halted. So let's say that a company has some big news coming out and it's kind of known that there's news. We don't really know what it is yet, but there's news coming out. It's going to significantly affect the stock, whether good or bad. A T1 is going to basically halt that pending that news. So that's a T1. A T2 is kind of similar, but the news is already released. So the news comes out and trading is halted strictly for investors. That's a T2. Not going to see, again, a ton of these, especially in momentum stocks. A T5 is basically what we're talking about, a circuit breaker. So trading takes a halt on account of a stock having more than a 10% change in its price. Or as we talked about, under $3 or more than $3 is 20. And then an H10 is where the SEC imposes restrictions on a stock from trading. Now that can be for various reasons. We won't get heavy into that because again, you're probably really not going to see a whole lot of that. So let's just have an example. There's obviously many markets we trade in a U.S. market. We usually trade, the NASDAQ, the S&P, things like that. So single stocks and major indexes, let's call it, we'll just talk about the S&P 500. There are specific halts for the market itself as well. Again, we trade circuit breakers, and that's mainly what we're going to see, but there are halts for the actual market itself, and that is level 1, level 2, and level 3. So level 1, if the market moves down 7% or more in a 15-minute period, the entire market is going to halt for 15 minutes. I'm sorry, if it moves down 7% in 5 minutes, it will be halted for 15 minutes. And that's the entire market. So that's the S&P.
SVC.
Level 2 is if it moves down 13% or more in a 5-minute period, it is also going to be halted for 15 minutes. So level 1, 7%, level 2 is 13% in 5 minutes, and both of those are 15-minute halts. Now level 3, if the S&P drops 20% or more in a 5-minute period, which is kind of crazy, it will be halted for the remainder of the day. So the entire rest of that day, the stock or the market itself is going to be halted. So level 1, 7%, level 2, 13%, level 3, 20%. Those are for, again, the S&P 500, the market as a whole, which we trade momentum stocks, and we're not really going to see a ton of that. So that's just kind of the market as a whole, if you will. So I have a couple examples of halts. I have a couple from yesterday, and I have one from today we'll look at. I do not. I've personally never seen it. I think it's only happened like a couple times. 2008, I maybe would say might be the last time, but I do not know. Are you aware of the last time? Okay.
ZIM.
Yeah, no, I'm just kind of putting out, some general information. I don't really look at the S&P as far as, halts go. We trade momentum stocks, and that's mainly what we're looking at. So circuit breakers are going to be what we really want to learn about, but just know that the S&P as a whole can be halted, and those are kind of the levels that it happens. So, all right, so we'll go into a couple examples. So this is a stock from yesterday. This was expensive. We didn't trade this. This is, a $40 stock. Again, I have this up on my screen. You guys can come back and watch this if you want. But so this stock here, it moved up from about $30 to, we'll call it 38 for easy math. So it gets halted at $38. It's a 5-minute halt. And you can see right here that it opened up $40. So we'll say it halted at 38, opened at 40. That's a pretty big jump. If you're in before that halt, that's a pretty good gain. But if you're not, let's say you're trying to trade the dip and rip, this is a great
SVC.
example. So halted at 38, opened at 40, dipped down to 39, and then ripped all the way up through 44. That is a great example of the dip and rip. Now, when we see that in momentum stocks, it's obviously going to be not $40 stocks, probably going to be $3, $5, $6, $7, $10 stocks, but it's going to be the same principle. So it's going to halt, it's going to open higher. We're trading the dip and rip. It'll dip under that level a little bit and then rip all the way through. And then here's another example of a stock. This one's a lot cheaper. Again, this was from yesterday. We didn't trade this because it was so cheap. But this example shot up all the way to, we'll call it 120 again for easy math. Halted. 5 minutes later resumed. It actually resumed lower. So it halted at about 120 and then it resumed, about 115. It dipped basically down to 110 and then kind of tried to rip, but that dip and rip would not have really been successful given the time it took to do that move. So that's kind of an example of one that did not work out. They're not all going to work out. So it's always important, even if you're trading the dip and rip, you need to have a plan after, the dip and rip happens, whether it's taking profits, stopping out, things like that. And then we'll look at an example today. So on Thinkorswim, if you want to follow along, I have DWAC up on my screen. I actually traded this, made a little bit of money, 118. Not a bad trade, but as you can see this morning, it started picking up volume. Price started kind of soaring. It went pretty quickly and it halted. We'll just call it 2150. So it got halted at 2150. I was in before the halt, thankfully, because it did, as you can see, resume lower.
REV.
So the next candle
SVC
that opened after the 5-minute halt, it actually resumed under or right about at 21. So it halted, we'll call it 2150. Resumed, we'll just call it 21. So it actually resumed lower. And in the previous scenario we talked about, if you do see that, you probably want to flatten, which in this case wouldn't have been a bad idea. So it opened at 21, dipped all the way down to about 2050. It did briefly rip. I watched this live. It was super fast, so
REV.
probably wouldn't have been able to take profits anyway. It did actually rip through the high, went to 2188, and then, as you can see, the rest of the day until this point, it's just continued down. So that's just another example of a dip and rip. That one not really working out, but halts in general, circuit breakers again are the ones that we usually see and play. Can play out both ways. They can go good, they can go bad. If you're in it before it, as we talked about, and it opens lower, probably a good idea just to flatten. If you're not in it before the halt and you do want to trade the dip and rip, again, you want to see it open higher, dip a little bit below that level, and then you want to buy for that breakout of the resumption level. So again, if it halts at 475, opens at 5, you want to see it dip below 5 and then buy for the break of 5. And that's just kind of a general overall halt lesson, if you will. And again, a little bit of how to trade the dip and rip, which is what we would usually trade out of a halt. So does anyone have any questions about halts or trading them? All right. There's no questions on halts. That's fine. If you guys have any questions about just trading in general or anything you've kind of seen or gone through this week, feel free to kind of bring that up if you want. We can all talk about it. Again, this was a kind of beginner lesson on halts, basically what they are and how we see them and interpret them, and then eventually if we do trade them. You're going to see halts again every single day on stocks, all the way from pennies to hundreds of dollars. It can happen, and again, it's just basically based on those parameters. If it's over $3 and it moves that percentage in 5 minutes, it's going to get halted. If it's under $3, again, a little bit different, it's going to move a little bit more of a percentage in the same amount of time. You'll see that halt as well. So, and then we talked about the market overall. The S&P does have level 1, 2, and 3 halts. We rarely ever see those. I've never personally seen one. Maybe some of you guys have, but that is a possibility and can happen. And again, halts are basically just trying to balance the order book, trying to not have a bunch of people FOMO buy or people dumping the stock. So when those percentage move happens in that short period of time, things are halted. They want to balance the order book and kind of get things reset it a little bit, if you will. So stocks can always resume higher and continue higher. They can always dump afterwards. You really just have to kind of watch and see what's going on. Look at the level 2, look at the volume, and again, always have a plan. Even if your plan is trading a dip and rip, you need to have a continued plan after that, because again, it's either going to continue lower, you're going to want to get out. If it's going to continue higher, you want to take profits along the way, maybe stop out, break even. So even if it's a dip and rip being the strategy you're trading, continue to have a plan after that.
GME.
And you might even see something like you saw today, the old
SOXL.
dip and rip and dip and rip and dip.
SPXL.
You might see a dip and dip. Halts aren't always a good thing. In a hot market, they're almost always a good thing. You're going to see things halt and halt and halt and just again and again and again, one after another, and you're just gonna feel like, what is going on? Like that's what happens in hot markets. But generally speaking, and especially in bear markets, halts aren't always a good thing. Getting stuck in a halt used to be
SNTL.
amazing, but sometimes in this market, you're like, I don't know if I really even wanted this thing to halt because, again, like you saw in some of the examples today, they can even resume lower. Some of them resume way lower. And if you have, a decent chunk of your account in a stock, especially if you get it right at or before the halt level and it resumes much lower, that can be a big loss. So again, just trade your plan, winning ratios, and hopefully you learned a little bit something about halts, how to trade them, what they are, why they occur, things like that. So if there aren't any other questions, I appreciate you guys showing up. We do have a question. Let's see. Why do some halts resume at like 5 minutes? Yeah, see, we actually, me, Jason Dagan, we all kind of talked about this yesterday, and it's one of the reasons we are trading less and less halts is because there's just not a lot of parity. There's not a lot of consistency in halts overall, which is kind of crazy because you think, such a large body as stock trading is, that there would be some uniform, guidelines and reasons and things like that. Like you said, that 5 minutes to 20 seconds, that can happen. I've seen stocks resume at 7 minutes. Like there's just not a ton of parity when it comes to the actual length of the halt. There is set guidelines, as we talked about. This percent in this amount of time is going to halt. After that, though, it just, you never know. Stocks are usually halted, circuit breaker halts, for 5 minutes. But I've seen stocks halted over an hour, and I've seen stocks halted again for weird times, 7 minutes, 6.5 minutes, 9 minutes. Like there's just not a ton of consistency on that end of it, which is mind blowing to me. But yeah, I have no explanation, nor does anyone I've ever talked to, as to why some halts are random times like that. All right, if there aren't any other questions, I again appreciate you guys showing up. This is just a beginner lesson on halts. Hopefully you learned a little something again about what they are, why they occur, what we kind of do with them. Again, you're going to see these every single day, and you're going to probably trade one or two or more every week because they happen a lot. And the dip and rip, if it works out, is a great strategy.
SOXL.
The longer the halt takes, is that a more bullish or bearish sign? See, that's another kind of dependent.
CSCW.
If a stock's halted for more than 5 minutes, more often than not, you're gonna be like, okay, that's a good sign. It's gonna give people more time to see that it's halted. It might hit people's scanners late. It might have a halt scanner, so that's gonna give more people time to kind of get in on it, look at it, dissect it, and potentially trade it. Anything past 10 minutes for me personally, I start to get like, and I think a lot of retail traders probably do the same thing. They're like, 10 minutes. Who knows what's going to happen with it now? And obviously things happen very quickly in the market, and a lot of things are tradable at the same time. So anything more than 10 minutes, there's probably something else to trade now, and it just starts to get like very uncertain. So if it's more than 5 minutes, and it's only about 10 minutes, I think that's more of a bullish sign than not. Anything over 10 minutes for me personally, I start to get a little weary.
CTM halted. CTM will resume at 10:56 and 24 seconds AM.
We can look at a little live example. CTM just hit the scanner and got halted. It's an IPO, very cheap, not a lot of volume, so not something I would want to trade. But as you can see, this just IPO'd. It opened at 136. It is now at 163, and it is halted. So that's kind of a live example that literally just happened. If you guys are checking that out. Again, it's not something I trade at the moment. It's just IPO'd, very cheap. So maybe that's something to watch later today or later this week.
ZIM.
But all right, I appreciate you guys showing up. Just continue to do that every day. whether it's at your computer or at a group lesson or just anywhere in life. Just keep showing up. We're gonna keep plugging away at it. We're gonna keep hopefully getting these base hits and doing what we can in this bear market, and
SVC.
hopefully, not hopefully, the market is going to turn around. We just don't know when. So we just got to stay ready and continue to equip ourselves to be ready for that. So thanks again for showing up. If you guys have any questions, feel free to DM me, whether it's about halts or anything, trading or mindset or just life in general. Feel free to message me, and I appreciate you all. And I hope you guys have a good day.
FL